how your auto insurance policy could ruin your retirement plan. That's what we're going to talk about here today at the Heritage Wealth Planning YouTube channel. And you can see I got somebody with me live in my basement here in Milton, Georgia. My friend going back a long time, Skip Ritchie, who's an attorney with the Skip Ritchie Law Firm. So www.skipritchielaw.com. We'll talk about that more later. Skip's in town. He was just doing a deposition in Albany, Georgia, which is about 3 hours south of here. And he came on by before he heads back to St. Louis. We used to know each other in Virginia, but he lives in St. Louis with his wife and is a bundle of joys. Not one, not two, but 5 times. And so Skip's a good man. And we start talking about auto insurance. And I got to tell you, my friends, I thought I knew a lot about auto insurance because I worked at USAA for 10 years. And what Skip told me, I said, we got to do a video, man, because I guarantee your financial planner has never said this, and I guarantee you probably don't know it either. So I want to introduce Skip. Before I do, don't forget to subscribe down below and then hit the bell to be notified for future content. So, Skip, thanks for coming on board, man. Let me give you the mic here. There you go. So, tell us a little bit about yourself, if you would, and just tell us what brings it, anything you want to talk about.
Okay.
While you're doing that, I guess I'll just share. Skip and I have been friends for 15 years, I guess, going back to 2000 or so, something like that, 2003.
Before Chloe or after Chloe?
Before Chloe, so 2002.
Yeah,
2002. Skip and I have been friends for quite some time now, and a family friend actually, and so a friend of the family, know his wife. It's just we haven't seen each other in literally 10 years, in 2008. Mm-hmm. So it's been a long time. So it's a pleasure to introduce him to you. So tell us a little about you, Skip, and what brings you in town.
All right. Yeah. Thank you, Josh. Thanks for hosting me. I figured I was coming to Atlanta, and I had to look up Josh, and I've been watching the YouTube channel, so I'm kind of interested how this all works. So we've been talking about things, but what's most important about this YouTube channel is Josh is trying to help people make good decisions and have a plan for retirement. Yep. And I thought about since 1996, I've been a lawyer who does a lot of stuff with insurance, a lot of stuff with auto crashes and injuries, and helping people who have suffered a lot of losses recover. And we've had to hunt through policies trying to solve the dilemma with the lack of funds, and then we've had to learn where to go for help, and a lot of times it's reading through policies. And so what we discovered as we talked just before this video, Josh, what kind of insurance do you have? Is your family protected? And as he looks towards retirement, he's looking to make sure that there's going to be money there. Well, along the way, most of us have had an auto accident. Most of us know someone who's been in an auto accident, and sometimes that auto accident's very serious. So we want to know, what do you have as for auto insurance, because that does impact your retirement plan. So if you have inadequate auto insurance and you have a horrific accident and lots of bills and you can't work, or maybe you never can work, then your retirement plan changes.
Big time.
And so partly that's what you'll go to Josh for, is the idea that there's a piece where the lawyer his number one goal would be to get you fair compensation for all your losses and try to build you back in terms of footing to where you were, close to where you were before the accident financially. But ultimately, you're going to have to come up with a plan, because now you're going forward with some new circumstances, some new limitations, possibly maybe some issues with your ability to work. And so how can we get ready so that that situation right now today can be prevented? And the first thing you need to do is go get what we call a declaration page. This is my auto policy. He had an auto policy. Yep. He looked up on the computer, and you can log in, or you can call your agent and get they call it a declaration sheet. Mine says amended declaration, personal auto policy. And so what we talked about tonight was the idea that sadly in America, there seems to be a trend where the rich are getting richer and the poor are getting poorer. So the bottom line is the people in the middle can have a car crash with someone who has very limited funds and have made the financial decision to have the bare minimums, which in some states is $25,000, some states it's even less.
Bare minimum auto insurance.
Auto insurance, right. Yep. So say they aren't paying attention, they're in a hurry, they're speeding, and they crash you. And you would say, well, they're going to have to pay for everything. Well, no, they're not going to have to pay for everything, because first of all, they only have $25,000 in coverage potentially, and it depends on what state you're in, but in Virginia. So then the only amount that they're liable to from the insurance company is $25,000. So you say, well, what do I do then? I mean, I didn't do anything wrong. How about the fact that my bills, I was in the hospital for a week, are $100,000 and I'm not going to work for 6 weeks? Well, that actually falls on you. And so for retirement planning, really where this comes in is if it's a serious injury and you don't recover in terms of 100% and you have some kind of condition or problem that really impacts your ability to work and earn like you had planned. So your big work years and earning years are 50 up until 60 something. So all of a sudden you've thrown your big time earning years off track and you're going to say, what do I do? Well, if you can't go back to work and you don't have a long-term disability plan, the only funds that you would have available to you would be your health insurance, which is only going to pay your medical bills, and then the auto insurance that you have. So what Josh and I did was we looked on his policy. Yep. Do you have, for example, underinsurance? That's one type of coverage. And underinsurance basically means the person who crashed you didn't have enough insurance to cover all the losses. So for example, your bills are $100,000 from the ICU. Their coverage is $25,000. You're underinsured. It means they didn't have enough. So that gives you the right to go back against your company. So in his instance, he has decent coverage, and I said, well, look and see if you have the word underinsured on his actual deck sheet. He didn't have the word underinsured. He had the word uninsurance. And uninsurance is a different type of coverage. Correct. That's where someone's going down the road, not paying attention, speeding, crashes you, hurts you, they're at fault, they get charged, and they have no insurance. And then you would be able to come back on your insurance up to the amount that you purchase. So for example, with $100,000 in bills, Josh and I both have $100,000 of liability insurance, and we also have $100,000 in personal underinsured and underinsurance coverage. So that means that all of a sudden, if someone had $25,000 in coverage, it could mean we only have potentially $75,000 in additional coverage through our insurances to try to make up for our losses. That's not going to cover lost wages, and it's not going to cover going forward if we can't go back to full-time work. So the question is, do we need to up those coverages? And that's an insurance question, but it's also part of financial planning.
Absolutely.
Do you want to have a good plan for retirement? Are you feeling like you'll be able to handle something like that? Because it's pretty common to have an auto accident, and I'd say as of late, it seems like auto accidents are getting more serious because there's more inattention.
Cell phones.
Right. So you have less anticipation. If no one brakes, then you definitely have better designed cars, but you still have, I think, more crashes where there isn't any mitigating factors where someone's actually trying to slow it down or avoid it. And so, Josh, what would you say to someone, you're thinking about retirement and they need to sit down? How would you approach this with them?
Well, the interesting thing, Skip, was the irony of this all is my daughter, we literally just settled this week from a crash she had that was not her fault. It was 2 years ago, November 2016. We literally just settled. And I would have hired Skip to be my attorney because his insurance was throwing roadblocks at us. And I said, I don't know what to do. So we hired an attorney, and she got it squared away. It was right. It worked out good. They just paid for the bills that we suffered, essentially. I mean, my insurance would have done that. But I mean, I'm telling you, I did not know this. And I'm sitting there thinking, and it was minor. I mean, she still got hurt, don't get me wrong, but it wasn't anything we think that is like life-threatening or anything. We feel pretty comfortable what actually ended up happening. But it's just the irony is that Skip was coming down today, and literally just this last week we got that check. It's, a couple $1,000, but so it got me to thinking. I said, as someone, an auto, everyone has an auto crash at some point, either them or someone they know and love. That's just a fact. Skip was using an example that actually kind of scared me, where I said, I got to find my own thing, because if I did not have the coverage that I thought I did, because I thought I had full coverage because my agent said I did, full coverage to him might be different than what I need by full coverage. And Skip will address that here in just a second. But it occurred to me, I said, what happens if, like my wife, when we lived in Phoenix, she got rear-ended by some legal immigrants, and they didn't have any insurance, and they fled the scene. And so at the end, did they flee? I can't remember the whole story. I just remember they were illegal. They weren't supposed to be here, but they didn't have insurance. And again, it wasn't life-threatening, but I just remember thinking this. I guarantee this happens a lot, not just with legal immigrants, but anybody. They don't carry the insurance that they need, and yet you're the one who suffers the consequence. You're the one who's put out of work. You're the one who's got just injuries and whatnot. What happens to you? Where does the money come from to pay? And so we looked at my policy, and I said, I see uninsurance. I did not see underinsurance. And the thing that Skip was telling me, and this is crazy, they're two completely different things. Just because you have uninsurance doesn't inherently mean, that does not mean it'll go into underinsurance. And so if you get hit by someone with $25,000 of insurance, but you have a $100,000 claim, your underinsurance will kick in. Not your uninsurance.
Right.
That was crazy, but I didn't know that. And I'm a CFP with 20 years experience and a master's degree. I didn't know that. And I worked at USA for 10 years telling people about their policy. And so I sat there and I said, Skip, I got 135. And that simply means that USA, we want you to have 100,000 liability. Mm-hmm. So if I crash somebody's car, that's a property damage or something like that, I think. 300,000 bodily damage and 500,000 per accident, I think is what it is. And so it's been a long time since I actually had these conversations with a client, but I just remember 100,000. So if I wreck someone's Mercedes, the insurance company, I don't have to pay out of pocket.
Right.
But then we started saying, well, that's fine. But what if someone hits you? And so tell them about the agent who says you're fully insured, but it turns out you're not.
Right. Well, it is so common since 1996, so more than 20 years. I don't know, I would say maybe close to 100 times or more, someone will come into my office and say, I have full coverage. Everything will be fine. And I'm thinking, wow, I don't know that to be true unless we check and see what that really means. And a lot of times that turns out to be you have coverage in every category, but it's the bare minimums in every category. So you might have the $25,000, which is the legal minimums, and it's full in a sense. You have insurance for all different losses, but it's not the type of insurance that would, in this case, impact your retirement plan if it was a serious injury. It's not the kind of insurance that's going to protect you. So $300,000 is definitely on your way to protect you. So for example, someone who has $25,000 in coverage crashes you and you're injured and you're in the hospital for a week and your bills are $100,000 and you're not going to work for several weeks. And so let's just say a quarter of your salary for the year, you make 60 grand a year. So let's just say you lose 10, 15 grand in lost wages. You will have potentially, depends on which state, possibly 275,000 additional money that you can go after from your policy for compensation for your losses. So, and in some states, it's a pure stacking where it would be 25 plus 300, so you have 325. So every state's different. Sometimes they have a credit, sometimes they don't. So you have to check with your particular state where you contracted for that insurance. So if you lived in Georgia and you contracted it in Georgia, most likely your insurance would be covered by Georgia insurance law. If you work in other states and live in other states, back and forth, there might be some exceptions there. But if you lived in Virginia, for example, you'd have Virginia contract law, and that would tell you whether there's a credit or not. But in general, $300,000, you need to price something like that to say, okay, because you're going to have, after settlement, say you had an attorney, they're going to take a fee. You're going to say, okay, I'm 55 and I've got a limp now and a lot of back pain, and I've got to work a desk job for another, say, 10 years, and I was hoping to work in a super competitive environment where you had to be able to think on your feet. And if you've got chronic pain and your attention concentration's messed up, you might have some days where you can go 8 hours and other days you can't. Well, eventually that's going to catch up to you.
Or what if you're a FedEx delivery guy?
Right.
And now you can't do it anymore.
Right. So, and you have to switch. So then all of a sudden, if you can get the maximum insurance, $300,000, 25 from the person at fault, and another 275 or 300 from yours, and then you pay your attorney, hopefully you have, roughly at least something close to $200,000. Then you would have something to go to Josh with and say, okay, here's the sad thing is I'm not going to be able to work full time anymore. I'm part time. And so what can we do financially going forward with our financial plan? I had an IRA. Let's say, for example, you worked hard, you're 55, you've got, say, maybe $500,000 in your IRA. But now you can't work, so your earnings going to dip way down for the next 10 years, and you got $200,000 for the settlement because you're smart. You went and checked your policy after this video.
Yes.
You changed your amounts, and I would even recommend you can go to $500,000 or $1 million, or even have an umbrella. And an umbrella's really cheap. So
once you get along those lines, will an umbrella play a role in this too?
So most companies, you have to get 250 as the number. Then you can add the umbrella, and it can be 1, 2, 3, up to a whole bunch of different numbers. So usually people who have a lot of assets to protect, or they are the breadwinner. Like they're the ones who run the business. If they're gone, the business fails. So and they're in a bad car wreck. They need to have quite a bit of insurance because they're the key, what we call a key person for the insurance. So say we go to Josh for this scenario. We have $300,000 in the settlement. We now have $200,000 in cash, but you're not going to be able to work anymore. What would you say to that client? You've been working with him for years. What can we do for him?
Yeah, and that's where it gets dicey. And this goes back to my 2-bucket retirement plan. Yeah. What are we trying to solve first and foremost? Are we trying to solve for growth, or are we trying to solve for income? In this case, it's income because you don't have any income. The second part about that scenario, if you're 50 or younger, don't forget, now you're no longer paying into Social Security. You no longer have earned income but even if you're working, you got a demotion of some sort, maybe not a pay, well, I don't know. Maybe can't, I don't know what the scenario is. But if you're not paying into Social Security in those primary earning years, like you just said, 50 to 65, the Social Security benefits that you were expecting as a 49-year-old man making good money are going to be a heck of a lot different than they will be, because remember, Social Security is based on your top 35 years of earnings. And so if your top 35 years of earnings were expected to be from 50 to 65, we're going to be the 15 highest years of earnings, and now you just got hit in a car crash. It's just as bad across the board. And so in this case, we'd definitely be looking at an income annuity. And again, we're using that as theoretical, but we got to get money in there to pay for you, because the facts are a market tumble is going to destitute you for sure. But I'll tell you what even will destitute you even more is if you don't have your insurance stuff. And so I'm just telling you right now, how many of you, and I'll ask you, because I frankly did not, and having worked at USAA, I should know better. Because we used to talk about this in financial planning. They don't do that anymore, unfortunately, at USAA, at least on the wealth management side. And I guarantee Vanguard doesn't do it, and all these other guys. And that's okay, because they're not licensed for that, but they should still bring it up. When was the last time you checked your policy? What's your limits on uninsured motorists? Oh, that's what I was going to say, too. So I look at my policy. Skip says, he's looking at my deck page, my declaration page online. He goes, I don't see the specific term underinsured. It said, uninsured and then something else, liability. So it said uninsured and liability, but didn't have the second thing, underinsured. So I texted USAA. I got on the chat thing. I said, hey, I want to make sure I'm good to go here. Do I have underinsured? And it turns out USAA, underinsured and uninsured flow in the one is basically one category. Mm-hmm. But you were telling me you've seen some cases where they don't have, like you say, you want to look at the UMBI or something like that.
Right. So in some states, it's mandatory to have. So Virginia, if you have one coverage, you have the other two. If you buy one, you get it. And so in Missouri, for example, if you don't want underinsured, you don't have to buy it.
Yes.
And I just got a case from friends who were in Las Vegas. The person who crashed them, the car that they were riding in, they elected not to have either. So it was a really horrific accident, and they had the minimal coverage in Nevada was $15,000. It just changed in July to $25,000. So we're talking permanent possible injuries here. The medical bills were $30,000, and the coverage was $25,000. And there was no extra coverage because her agent didn't explain to her that she could buy underinsured, and the person in Las Vegas decided that they really wanted the cheapest plan they could, and didn't let my friends know when they got in the car that they basically were riding in a vehicle that was, very minimally protected as to them in terms of injuries.
Full.
Right.
They thought that full coverage.
So it is good to look, and I look on my sheet here, so it'll say bodily injury, and mine has a per person per accident, and then they have a property damage. And then they have medical payments, which is another piece we can maybe do a talk on that helps you get reimbursement on medical bills only. But under uninsured, there's a specific number by it, and there's initials, UM and UIM. Right. So you're looking for both initials, UM and UIM, which means both underinsured coverages on your plan and underinsured coverages are on your plan. And so for me, my uninsured motorist coverage is $50 per vehicle for one vehicle for 6 months, and my underinsured for $100,000, which I need to change because I just noticed that because it's not the same as my liability, is $41.
That's your premium?
Yeah. So $90 every 6 months, I would have $100,000 of underinsured and uninsured. So for both categories, I'm covered for $100,000. So we're talking $100 a year for one and $100 a year for the other.
So for $200 a year, you'll have $100,000 of coverage.
Underinsured.
And
yeah. So it's something so when you hear the word full coverage, you really need to look at the paperwork because they a lot of times and it's so sad, I think, in some ways, is that the insurance agent makes money by selling good coverages and makes more money by selling higher coverages. Right. But it seems like there isn't much dialogue and conversation about at the office with the agent, the insurance agent, is, okay, what are your goals? Are you thinking about the retirement? What do you have to protect? And they just sell this coverage that they confirm as full coverage, which it is in some ways, but it's not. It's not protection of your family,
right.
And it's not protection of your livelihood in case you really get injured. It's just basically legal minimums, and that's dangerous to think. If you really have retirement goals, and for example, you're working with Josh, we really want you to pull your sheet and then do a comment after this video.
Oh, yeah.
I found my sheet, and yes, I have it, or yes, I don't, and what state you're in, because that kind of lets us know that, like, the climate that you're in, which is you have. I'm sure you have a professional agent, but somehow you're lacking some key coverages, and no one's brought it to your attention. Yeah. And a lot of times, the electronic coverages now through companies where you don't sit down with someone, they don't know who you are. They just let you click off whatever you want, and if you're not educated in what to buy, then you get what you click, and the problem is that click is going to be devastating to your retirement plan if you don't heal and you have a permanent injury where you're really limited in what you can do on a daily basis. And it happens with car crashes, and I've seen it over my 20 years. Some people lose limbs, some people have permanent brain injuries, some people have back surgeries and they never really have their back come back. Other people who have hand injuries, they can't write, or even internal injuries where all of a sudden they have these complications with their stomachs, or ankle injuries. I had a lady who her ankle was amputated. So you're gonna have arthritis and you have a hard time walking. Almost every job requires a good bit of walking, and that pain every day,
standing or something,
it's going to interfere.
Hey, tell them about Skip. So Skip was using an example I thought it was pretty interesting, actually, that if someone didn't have coverage, let's say a semi, laid some tire retread, what do we call that?
Yeah, it just comes off the wheel. You see them on the highway.
The
big black chunk of rubber on the road.
Yeah, exactly. And so just driving down the road late at night, squirrels off the road and hits a tree. And we don't know who to blame, so you can't hold a trucking company accountable. But they have more than $25,000 of bills, and they don't have the coverage.
Right.
That person is in a world of hurt because there's no one to sue to get your recompensate or whatever it's called,
compensation.
Yeah, which is legitimate yours, but you can't find a guilty party, and there's no one else out there. It's just you had a bad misfortune. And I'm looking at Skip's coverage. For $100 a year, you could have been solved all that. It's crazy. And so we're not insurance salesmen. I'm not licensed. Skip's not. I don't talk about it. We can talk about it, but we don't sell it for commissions or anything like that, for heaven's sake. But you see all these companies like Geico, State Farm, USA, Liberty. Liberty to advertise it on this. Yeah. You probably see the Liberty thing here. I mean, are they absolutely taking the time to identify the risks that are inherent in your policy, or are they just saying we can save you 15% in 15 minutes because they're just using some boilerplate? And I don't know. I just know that when Skip brought that to my attention, it scared the heck out of me, knowing what I just went through with my daughter. And thankfully, it's always good. But anyway, the point is, and we're going to go into this in another episode here. We'll wind this down here in just a second, but we're going to talk about long-term disability too, because that's an area Skip also specializes in. And again, it's an area that I think the average Joe, and I'm going to put myself in there, even though I'm a CFP with a master's degree and 20-plus years experience, But I didn't know this on auto insurance and long-term disability and how they kind of play together. And going back to your financial/retirement plan, bad things happen to good people, my friends. And if it happens to you and you don't have the coverage you thought you did, you're just not going to escape that. And we just simply can't have that happen. So, Skip, you want to just tell about your firm and your website and all that? And look, I know Skip. I give him my full endorsement. That doesn't mean you call him up and say, Skip, I want to hire you to do it. I don't know. Don't know your needs. Don't know anything about you. All I know is that we're here to share with you education. The more education we can share, the better off we're all going to be as a society. And Skip and I both have we both believe in a son who's the son of a Jewish carpenter. You know what I'm saying? So I'm missing the term there. Anyway, so we both take our lot seriously to help people with their financial situation because we think that'll create a better society. But Skip, he has lots of free stuff. Well, just you tell me.
Yeah. So I like to help. So one of the ways I help is with a brochure. But my brochure is just for Virginia law. But it's like basically things to think about when you buy insurance. And basically what we've been talking about tonight is in that brochure.
Okay.
How to buy
car insurance?
Yeah, car insurance. Just specifically car insurance. And so another thing is I'm happy to talk to people for free. My main role as a lawyer is post-accident help. And I would say the biggest thing I've learned over 20 years is it's better to call a lawyer early and talk for free right after the accident. Or sadly, some people are like, well, aren't you overzealous? Aren't you being greedy? The most crucial time in an auto accident is at the scene and all the evidence and the things that happened at that scene, because basically your case in court is built on whose fault it is. And so I would love you to not have to call me right away and put pressure on me to help you right away. But the bottom line is for me to really help you, if I don't get that stuff early on and we don't gather good photos, like this insurance stuff, that's going to be there. You've already paid for it. Whatever you have is what you have. So the second part to this would be the pre-accident conversation that you need to have with Josh. He's not an insurance agent. He's not trying to sell you insurances, but he can look at this and help you think through, and he can remind you to call and get this and then start making a plan. What would happen if you had a serious accident and you don't have adequate coverage? What are you going to do financially? And you don't have other insurances to kick in. You don't have long-term disability and Social Security. Obviously, you possibly could go for Social Security disability, but your earning years for retirement, some of you really going to impact yourself because your money that you planned on making over the next 10 years may not be there. So there's a lot of things to talk about. So I think the first thing would be is get your deck sheet and meet with Josh and say, okay, I want to have enough money that if I have a big accident, that I won't lose my home. I won't I will be able to pay for things. I'll have money coming in per month. I'll be able to help my kids with college or whatever that is. But if you have the bare minimums and the person who hits you had the bare minimums, you're going to have a huge loss. And if you don't get better and you have ongoing medical health problems with limitations on what you can do in terms of work, you're going to have some real economic challenges.
Yeah, I agree. All right, so we hope this helps, my friends. Again, it's just the more I see about financial planning, the more paranoid I am. Financial planners are a paranoid bunch by nature, but just because we're paranoid does not mean people are not out to get us. It just means we see that there could be people out to get us, but we look to see what are the issues that await you and how can we solve those issues on the front end so that they don't come and bite you in the butt in the back end, because your retirement plan is contingent on that for sure. So don't forget to subscribe. We're going to do some other videos here on long-term disability and some other stuff as well. So if you like this, it'll be part of a series. Go to skiprichielaw.com, and get his brochure. Even if you're not in the Commonwealth of Virginia, there'll be some good information for you. But just remember, law is specific to the state you live in, so you just got to remember that. Get your declaration page. That's what Skip's showing us, his declaration page. And then if you have questions, absolutely. Lastly, put them in the comments. I would love to see. Say what, and we don't know who you are. We're not going to call you. Just put in the comments. Say, hey, I got 25,000 of uninsured or whatever it is.
Or I don't have any.
I
was surprised. We want to know how many surprises.
That's a wonderful thing. So definitely put that in the comments, because I have a feeling if you put in the comments, other people would be helpful.
Right.
Too.
Encourage them to check.
Yeah. So we'll see you guys next time. Thanks now. Bye bye.